Downsizing is supposed to free up cash, right? But here's the $70,000 reason it usually doesn't. I've been selling homes in the Caledon and surrounding area for over 3 decades, and here's what I believe. Downsizing can be one of the smartest financial moves you'll ever make. I also believe that almost nobody runs the real numbers before they decide to downsize. And it's not because they're careless, it's more likely because nobody hands them those numbers until it's already too late to change the course. One of the most expensive mistakes downsizers make happens before they ever list a home, and almost no one catches it in time. And by the end of this video, you'll know exactly where that money goes and whether the math still works in your favor once it's all on the table. Here's the number that matters. Across Canada, sellers typically give up somewhere between 4 and 7% of their sales price in closing costs. And on a home in the $900,000 range, that's tens of thousands of dollars gone before you even started shopping for the next place. And it's not one dramatic cost, it's several ordinary ones stacked up together that most people never add up until it's too late to change their plan. Recently, I worked with a couple, 31 years in the same house, 4 bedrooms, big yard, mortgage paid off completely. They'd done the math themselves. Sell for under $1 million, buy a bungalow for $650, retire with over $300,000 sitting in the bank on top of what they already saved. Sounds like a reasonable plan, right? Except once we added up the cost, commission, legal fees, land transfer tax, moving expenses, and getting the home ready, the real number wasn't $300,000. It was closer to $225,000, $230,000. Still a great outcome, still the right move for them. But a $75,000 surprise is a rough way to find out 3 months after closing and when there's nothing left to do about it. Why this catches smart people off guard. This isn't about being careless with money. Some of the sharpest, most financially disciplined people I've worked with have made this exact same miscalculation because it's a behavioral thing, not a smarts thing. When you've lived in a home for 20 or 30 years, the sale price becomes an anchor in your mind. And that number, well, it sticks. Nobody anchors on the costs because the costs aren't advertised anywhere. So the big number is the only one that feels real, right up until every small number shows up on the same page at once, at closing. So here's everything that adds up, all in one place. Commissions plus HST on the sale, and that HST on top of the commission itself is the part that almost everyone forgets to budget for. Legal fees on both the sale and purchase, land transfer tax on whatever you buy next, and there's no rebates this time around since it only applies to first-time home buyers, getting your current home ready to show, and the cost of the move itself. And if you have a line of credit or are still carrying a mortgage, there is a discharge fee plus a prepayment penalty if you're breaking your mortgage term early, which can range from a few $100s to several $1,000s, depending on your balance, your rate, and your timing. No single one of these is the dramatic cost. It's all of them together that create the gap. And if your home is already mortgage-free, you're not off the hook entirely. There's still commission, legal fees, land transfer tax, and moving costs, which all still apply. You just skip the discharge fee and any penalty, which is, well, one less variable to have to worry about. If you want to see this laid out against your own numbers instead of a hypothetical one, that's exactly what the Downsizer's Guide is for. It walks you through your real net proceeds step by step, using your actual sale price and purchase price, so you're planning around your own situation instead of an average. It's the first link in the description below, and the guide is free. Let's put the real numbers next to this so none of it stays abstract. Say you sell for $950,000 and you buy for $650,000. On paper, that's a $300,000 gap. Would you agree? Now let's add it up. Roughly $53,700 in commission, including HST, $3,000 to $4,000 in legal fees across both transactions, about $9,500 in land transfer tax, another $7,000 to $8,000 in moving expenses and getting the home ready to sell. Altogether, you land somewhere around $70,000 to $75,000. Your real number isn't 300,000, it's closer to 225 to 230,000. So here's the part people don't expect me to say. Even with $70,000 in costs, downsizing is still very often the right move. If your new place cuts your property taxes, utilities, and maintenance by even a few $100s a month, that cost pays for itself within a handful of years, and everything after that is real savings for the rest of your retirement. Where it stops making sense is when the gap between your sale price and your purchase price is small, when you're likely to move again within a year or two, when a mortgage penalty eats a disproportionate chunk of what you'd otherwise save. Now keep in mind, this is all still dependent on how important a downsize move to you is, perhaps for physical reasons. The point isn't to talk yourself out of downsizing. It's to walk into the decision with your eyes open instead of your fingers crossed. Here's 3 things you can do before you list your home. Number 1, get an exact mortgage payout statement from your lender if you have a mortgage or line of credit. Since the exact figure depends on your rate, your balance, and your timing. Don't estimate out of the blue, get some kind of ballpark figure that you can work with. Number 2, ask your agent for a written net sheet specific to your home, so you're working from real numbers. But keep in mind that those numbers, the estimated sale price of your home, is fluid, meaning the sale price or value of your home will depend on market conditions, and over time, we know that the market changes. So if you're not planning on selling right now, know that the market value of your home will change over time. So if you're planning in 6 months or a year, you'll need to get that value updated, but it gives you a starting point. Number 3, get at least one moving quote, ideally before you accept an offer, not after, especially if you're moving any real distance, such as moving across the country. It can be expensive, and knowing that number is one less unknown to have to deal with. So your wise next step, before you call anyone, before you list anything, before you fall in love with a listing for your next home, get your real net number, not the list to list number, the net to net number, with every single cost accounted for. That will help you become better informed and better prepared to make great decisions. And hey, if you found this video informative, don't forget to hit that like and subscribe button. And don't forget to check out this next video, which answers the question I get asked almost as often as the one we're talking about. Should you buy your next place first or sell your current one first? Getting that order backwards can cost you almost as much as skipping this math altogether. You'll find the link in the show notes below. I'm Evelyn Lopes, a realtor with RE/MAX Realty Services, and for over 35 years, I've helped homeowners and empty nesters in the Caledon, Orangeville, and surrounding areas who are ready to downsize but don't know where to start. You don't need to have everything figured out before you start the conversation. Sometimes the first step is simply understanding your options, and I'm here to help.